So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling here, 9th of December 2018. No trade calls, recommendations, or response for their own stuff. Hope everybody's having a great weekend wherever you are, whatever you may be doing. So, as we go into this week, should be interesting. We got 2 weeks that should be very, very interesting. Main event risk for this week is going to be Brexit, Parliament vote, and then we've got the ECB, and the week after that is going to be the Fed, right? So at this stage, the way this is trading is we've got equities closing fairly heavy. We would expect them to probe lower, right? And if this is going to be textbook, you'd probably expect those to, gap down or press lower Monday, Tuesday, then maybe recover a little bit into the ECB. Then maybe there's an opportunity to sell them again, and then we have to wait for the FOMC. And if the FOMC continues, then it's probably going to stay heavy. If we get any sign of the FOMC walking back, backpedaling, or God forbid, not raising rates, then you probably want to buy them for the year-end rally. That's the way I think most people are going to be looking at them. Now, essentially, what's happening is the same move across the board, right? And you can see it here on this MT4 view quickly, basically. ES, YM, NASDAQ, Nikkei, Euro stocks, DAX, FTSE. It's the same move across the board, right? And as we discussed in detail, those bull bear lines were extremely, extremely pivotal for Momo and flows, right? Not only were we saying, it's very suspect on those ramps, the VIX was staying bid. In our base case, also published on the blog, any pop or gap up into the G20 was going to be a nice little selling opportunity, right? But on those moves back through those pivotal numbers, those offered some very nice risk reward as we looked at live pretty much in the room, right? On that move back into the 27, very tight stop. We wanted to lay out some more here. Unfortunately, we only got a chance to lay out this, but still fairly decent risk for the possible reward, and these trades are playing out quite nicely. So as we go into the week, nothing much has changed. It's really all about this risk, right? A lot of those measured moves trying to complete to the downside into the year lows, into those 123 extensions on the NASDAQ, on the ES. And essentially what we're looking at is probably, 4 to 6% down, more room to the downside on all of these. So again, nothing much has changed. It's going to be very, very interesting. But one of the tells was also, as we discussed, the fact that VIX was broadly speaking staying bid, and even though we're getting those grind higher, the VIX was staying bid, and also Asia wasn't really buying all those ramps. Asia stayed fairly heavy. So we'll have to see how we trade into the week, but essentially nothing much has changed. Nothing much has changed, right? So let's get back into here. If you look at the DXY, essentially we're stuck. You want to keep a very close eye on how we trade here. Remember that it could stay very, very sloppy, and any move higher, unless we start to see this really press higher and get some traction above those 98s or something, it doesn't necessarily mean that much. And unless we really start to trade below the 96s from a closing basis, it really doesn't mean that much, as this remains a very, very choppy zone. We'll likely know a lot more after the FOMC, and essentially what that's probably going to do is it's either going to, put a fork in it and we get the move down, or it's going to keep range bound to maybe slightly bid. But don't be surprised to see this as we get closer to the FOMC, maybe try and catch a little bit of a bid. Usually these moves have been fade. It would have paid to fade those, whether you're looking at that in terms of DXY, whether you're looking at that in terms of gold, but we'll discuss that a lot more. Now, as we go towards the back end of the year into January, I'm going to try and do some individual videos, right? Euro, cable, commodity currencies, equities, just to do some bite-sized things, chunks that are easy, digestible, just to look at where we end in these next 2 weeks and setting ourselves up for next year or the beginning of the year, because January tends to be a very interesting month. But essentially, right, on these equities, as we said, we're looking at these moves to complete for the market to probe back into year lows on NASDAQ, on the ES, right? There's no big change to what we've been discussing. A lot of people still focusing on crude. As we said, our base case on crude really hasn't changed, right? And as we said on this, we would not be surprised to see this $10 lower or $10 higher, and essentially it hasn't gone anywhere. Our base case is still the same, that if we start to move back into this range, right, you're going to get OPEC, etc., are going to start to panic. You'll see a lot of jawboning because nobody really wants it to press below there. If we start to go crazy and rip all the way back, you know, that whole 70-80 zone is Trump going to be active on Twitter, and they're going to jawbone it down. So essentially, probably everybody's fairly comfortable with it trading inside this range. The real danger zone is, you know, whether we start to move in terms of really getting excited is if we move to the upside back in that zone, or if we press heavy into these this level, right? So we still consider that anything that's stuck inside this range is just directionless to a certain extent, right? And that this is probably where where most business will be done, or this is going to be an interesting zone to play. So if anything, we'd be looking, again, in no hurry to trade, no hurry to hold overnight risk, no hurry to hold over weekend risk. But if anything, you know, we would not be looking to sell. We'd be looking to buy inside this zone. As we said, we'd still be looking to sell inside this zone. But right here, we'll have to see the ECB, FOMC are going to be a lot more interesting to us, and we feel there are a lot nicer, better opportunities on equities and on the FX space than necessarily looking at here. But if anything, you know, gun to the head, we'd prefer not to do anything, but if we had to, is look for some kind of tactical longs around this zone back in crude. And again, if you look at on the Forex side, nothing much has changed. I mean, before we go on the Forex, we really have to highlight these tech names really look heavy, right? We've got that chart floating with all those gap fills on Apple, and we still think these could get very, very ugly. So these better catch a bid soon, or, you know, it's really not looking pretty. We'll go into detail on those too. Let me see if we can load some of the Forex charts. I'm going to try and do some specific videos this week. Let's see if we load some of the Forex charts, mainly Euro and cable, right? So cable, as we said, expect this to get worse before it gets better. But again, the problem is everybody's positioned heavy, right? The market's very, very short here, so you can't really sell into the hole. If anything, there may be we would be looking for tactical opportunities to try and get long, if anything, but similar to crude, in absolutely no hurry to trade here. But as we said before, this is going to be a really interesting zone to look at possible reaction. I think what everybody's going to expect is, you know, vote's going to go through. It's not going to be good. And if anything, is there going to be a move lower that cannot attract new sellers? And then we get a chance to get long, right? But essentially, you know, these areas are really capping short terms in terms of a lot of sellers coming in and some kind of support. And if the 126 lets go, then we're looking at 119s. And if the 130 goes, then we're looking at much higher, right? Nothing much has changed. And that's the frustrating thing with a lot of these charts, is that we're still stuck where nothing much has changed. We just have to wait for opportunity, right? Similar on Euro, it's all about this weekly chart. And as we said, you know, is Draghi gonna give the go-ahead or not? You know, are we gonna go back out and take those lows or not? And I think everybody's looking at it exactly the same way. As long as those lows hold, you're looking for this to go back to the 115.50s and possibly pop all the way back into the 118.50s. If that gives from a closing basis, then this could clearly be in the cards. So you see how frustrating it is, because not a lot has happened, you know, and we go through phases where there are a lot of trades happen, a lot of swings, But once they trigger and they're over, right? Like those Aussie and Kiwi longs, they're over. It's finished. You have to wait for the next thing to set up. On Euro, the trade's triggered. We have to wait to let it play out. CAD, we had those tactical opportunities back into range low. That's finished, and we just have to be patient, right? So here, there's not an awful lot to discuss. But I will be updating as soon as something sets up, right? Even on this Aussie, you know, we're back at a very key zone because we've come all the way back down. If this was going to be a strong move, you would have had expected, let me do this way. The buyers to come in strong at the 50 back. See how it's holding heavy? Because the problem is this is very risk-on, risk-off currency. So here we'll have to see how this resolves on the equity side. But again, it's as much as I was happy to call the long here on the double bottom for the move here, I'm really not confident in trying to get back long to play this here. But equally said, no interest in getting short. So it's just one of those situations where we have to be patient. We have to understand what's going on, and we have to understand what the possible opportunities are, right? And right here, the possible opportunities are the trade we're most likely in. Some of you might be riding gold longs. A lot of us are in those euro longs. A lot of us are in equity shorts, but there's nothing really new, right? If you're not in a trade, and sometimes that's just the way it is, there's nothing that's really jumping out of you here. If anything, what would be setting up this week, I think, is there a chance to buy some cable on a press lower and unable to track new sellers? Is there an opportunity to see equities puke early at the beginning of the week? And is there going to be a tactical long on equities, even understanding that our broader view is still bearish, right? But those are the kind of things that may be setting up. It's not particularly interesting. It's that wait and see phase, right? But as soon as things get interesting again, we'll get active and we'll look at new opportunities. Okay, guys, have an awesome week. Talk to you guys soon. Take care. Bye-bye.